All right, a few comments coming in from Governor Rajan talking about how global cooperation on an oligopolistic industry can help, and saying that we're better off in protecting the banking system as new risks have emerged from banking regulation reform. So just some commentary coming in there from the RBI governor, and we'll talk a little bit more about some of those banks shortly. But let me welcome in our guests. We've got AVINNAsh GORAKSSAKAR and Mohit Gava joining us in studio, and we've been tracking the monsoon, so I'm going to start off with that. AVINNAsh, if we do see it come in on time and as sort of healthy as is being predicted, what's the kind of impact you see on markets?
I think if the monsoons do come in, say around 20 odd days, because that is what Cogen has just reported today, that pan-India we could possibly see a complete rain, coverage. I would say that it would be a big sentimental booster. Probably even levels of 8,000 ABA could be possible, because I think clearly the markets are holding on for the last few sessions. FI inflows have also been pretty good, and I think the near-term worry on US markets of an interest rate hike are also now clearly back-ended now. I think possibly most people are expecting November, December, possibly the rate hike to come in. So I would presume that the rural impacted stocks, especially where the rural market shares are significantly strong, something like a Hero MotoCorp, most of the agrochemicals, fertilizers, tractor companies, these could be sectors and stocks which possibly you could see a good run up the moment the monsoon actually arrives.
Okay. You mentioned 8,000, so I'm going to get Mohit in. Upside, in fact, in the morning you were saying possibly above that also, right, Mohit?
Yeah, the first hurdle is 79,58,000 from what we can see in the charts, and once we get past them, which given the momentum we've seen yesterday and the follow through even today, though it's been only 20 points, it's a very, very good move given that we've moved so much yesterday. If 8,000 is taken out, then 8,200, 8,250 also is on the cards. What I like most about this rally is that it's being led by financials, by the bank nifty per se, and more or less when that happens, we tend to see follow through. So I'm pretty bullish right now, and unless we take our crucial levels on the downside, I will continue to be bullish.
So, AVINNAsh, any risks to that, given that we still haven't seen all the banking numbers out? We're still hearing from the RBI governor talking about protecting the system, saying, questioning if new capital requirements have made the system more fragile. It's a little worrying hearing some of this commentary, but any risks to this strength?
I think you sounded absolutely right. I think the second set of extremely bad numbers, the PSU bank numbers. In fact, Andhra Bank came out with numbers yesterday. A 12% gross NPA, profits down by almost 75%. So I would say that we had this week you got Punjab National Bank, you got you got a smaller bank like Bank of Maharashtra. Possibly a lot of asset quality pressure could be continuing. In fact, the frontline banks like maybe a Bank of Baroda, SBI, there also I think probably that is the only reason possibly the markets could possibly get a break. As Mohit was right, the bank nifty has to actually show good strength. Unless that happens, you may not see a very big sustained kind of move on the markets. But I think clearly what commentary comes from these banks, because the willful defaulter list which came in ABA is extremely scary for this PSU bank. So I would say that that negative apart, I think the other part of the market seems positive. But obviously, if the bank numbers are extremely bad, from frontline banks like Bank of Baroda, SBI, or maybe an Allahabad bank, then probably some break to the upside could be there.
All right, fair enough. Some more comments also coming in from the governor there. He's talking about, again, questioning, have the new capital rules made banks stronger and markets weaker? And are banks extremely regulated while shadow banking is not? So I'm going to try and put some of this into context for you in a couple of minutes there. We just got a few more comments coming in from him as well. In the meantime, I'm talking about some of those monsoon-driven stocks in the mid-cap pack. Mohit, let's get some of those going on the chart, because we've already started to see an uptick on some of them. Would you say this is a good time to get into some of these names? Would you wait a while? We've already got positive commentary now coming in from SkyMet. So the likes of Jain Irrigation or some of the other stocks driven by a healthy monsoon. Some of the rice stocks are buzzing, sugar, a lot of these agri-commodities. What would you buy?
See, talking about that, a lot of these stocks have already run up, and today they're looking more like sideways. The one I actually want to talk about before we get into that is Capital First. We've been tracking this stock since the levels of 440, and it's at all-time highs at 494 today. It's seen a really good up move, so it's a buy with a stop loss at 484. You could see targets of 520 to 530 on Capital First. Another one that I like is Supreme Industry. Supreme Industries is also trading at an all-time high at 838, and that's a buy with a stop loss at 825. You could see targets of 850 to 860 on Supreme Industries. Both these stocks are mid-cap and trading at all-time highs.
Okay, there's a whole host of earnings in the mid-cap space. Avinash, I'm going to just run through them. 8K Miles, we've got MM Forgings, Shrikalasti Pipes, Deepak Nitrate, Allstorm, Career Point. So we'll just run through some of those names for you. NIT, we just heard from the management a short while ago as well. Vardhaman Textile. So varying reactions on some of these stocks, which we'll just run through. EID Parry on your screen as we talk, a 67% uptick on that one. So we'll also take a look at the reaction there. Any of these, Avinash, or from the heavyweights, of course, we're still watching out for Z, but lots in the mid-cap pack as well that we've been tracking this out.
No, I think broadly, numbers have been much better than expectations. You spoke about few names like Vardhaman Textiles, 8K Miles, or for that reason, Deepak Nitrite. I think numbers have been pretty impressive. I think, some of the companies have actually exceeded, the market expectations for the earnings. My guess is, I think probably, as far as the monsoon-related stocks are concerned, something like a PI Industries or something like a Rallies India, or maybe even something like even a Swaraj Engines, which actually is in the tractor business as a part of the Mahindra Group. So I would presume that, probably these kind of stocks probably would definitely get a rub-off effect of a good monsoon. And I think broadly FY17, should start off on a good note. Interest rates have come down. I think more importantly, rural demand should get a big fillip if the monsoons are definitely decent and, much better than the last 2 years.
Okay, we have a new listing as well, Ujjivan Financial, which is a microfinance player. 231 is where it's listed at. I don't know if you've had a chance to look at that, Avinash.
In fact, Abha, if you see the credentials of the company,
Yeah.
they've got a geographical pan-India network, a very strong AUM. And more importantly, asset quality has been under check. So if you compare this with the recent listing like Equitas, which was probably a couple of months back, I would presume that Ujjivan is a much better player in terms of the balance sheet size and in terms of the geographical reach. And I think over a period of time, some value upside definitely looks, because the stock has been, sold at the upper end of 210 rupees.
Right.
And just a 10-12% upside on a, IPO. I think Thyrocare, which came just about a couple of days, you saw a 50% pop up on the day one. So this is definitely a good company, but I think probably one should not rate it based on one day's market performance. But overall, I think prospects for the microfinance business and in specifically Ujjivan definitely look
good. Okay, I think SKS has always been on Mohit's radar as well, so he's been pretty positive on that one.
Yeah, since the levels of 540, 550, it's been looking good. Now it's still holding out. It's come down, but it's holding out at levels of maybe 585. I'd wait for it. If someone was looking to enter afresh, I'd say wait and let's get some more up move on it above 600, 602 before entering. I just want to take a minute and talk about a couple of mid caps that are catching my eye. One is CCL. It's looking really good in the charts. It's trading at 233. This is a buy with a stop loss at 227. We could see targets of 245 to 250 on CCL. Another one that I like is Sira. Sira is looking. It's given a fresh breakout above levels of 2035 today, and it's a buy with a stop loss at 2025. You could see targets of maybe 2150 to 2200 on Sira as well.
Okay. What do you make of JSW bidding for all these assets, Avinash? I mean, we saw the deal between the brothers. Now possibly looking at Tata Steel's UK assets. There have been all kinds of talks with different players for beaten down assets. What do you make of it?
Well, I think most of the managements are making a clear case for deleveraging their balance sheets.
Yes.
And I think in case of JSW Energy and JSPL, I think both the brothers probably realize that, one can't obviously survive without the other business doing well.
Right.
But clearly, the operational, the execution part of this deal, Abha, is going to take a long time. I think even this quarter, JSPL showed a pretty big loss. And my sense is it would be a long way before we could see core earnings, improving. This deal is definitely positive, but longer term.
So that's just it. I mean, if they're also looking at buying, the UK ops of Tata Steel, the bigger question is, isn't that going to worsen their debt picture? I mean, they don't want to take on the liabilities they've said, but they're still going to shell out cash.
Actually, unless those assets are really profitable assets, Tata Steel coming out of those assets is because margins have not been great and overall global conditions have been bad. So I would presume that probably so much acquisition in such a short time, Abha, would possibly put stress on the cash flow, would again raise the debt levels, and probably that would be again a kind of a sore point going forward. So probably JSW Energy buying JSPL's power plant is definitely a good sign, but UK assets probably one should look at the numbers, because clearly the global assets were Tata Steel came out of this because they were stuck up in these assets for a pretty long time.
Okay. Well, talking about metals, Hindalco today is actually on the downside, sliding a little bit because of global aluminium price decline as well. We have seen that commodity tumble really post China figures in global markets as well. Hindalco today, Mohit?
Well, it looks weak and it could continue to move lower. Next levels to watch out for would be 85. Actually, the whole metals pack in general is not looking too good. We've seen a really strong up move, maybe 30 to 50% up moves in stock specific like Tata Steel and JSW Steel, and it's not really given weight to the recent rally we've seen in the last couple of days. So maybe it's a good time to start booking profits from an intermediate point of view on these stocks, like we recommended last week as well, and wait for some kind of consolidation before they start moving up higher again.
Okay, in fact, talking about the data from China, the latest data, in fact, that we're looking at seem to be in line. Bloomberg caught up with Frederick Newman, the co-head of Asia Economic Research at HSBC, and asked him about some of the implications, where he felt the economy was headed. Let's listen in.
Possibly. It's not too surprising if you look at what happened to commodity prices in the last 2 months or so. If you look at steel, the steel sector kind of ramping up in the last couple of months. You saw steel prices going up as well. So it's not terribly surprising. The bigger question is it really sustainable? And here I think there's still question marks, because there might actually be a deceleration of growth coming through again, a risk that the stimulus might be dialed back a little bit, because things have gotten in some segments a bit frothy. So Chinese policymakers are getting perhaps a bit kind of more cautious about adding more fuel to the economy.
But I mean, a lot of that also has to do with just, again, we go back to this old issue of overcapacity, that there's just still a vast amount of overcapacity that needs to be worked out.
There is, right. And so you can ramp up demand in the short term and push up prices. But if you don't take out excess capacity, and we still haven't done that on a large scale, the downward pressure persists and the deflationary pressures, particularly in steel, cement, all these overcapacity sectors. And that's even being exported to some extent, right? So we see bigger trade actions globally because we see cheaper steel being pushed into the United States and so forth.
What about what's happening in the market? So this boom and bust cycle that we're seeing in China, especially with commodities, now Chinese authorities are coming in and stopping that frenzy that we saw there.
Speculative trading.
Yeah, it's we see periodic speculative frenzies emerge, and that's part of the byproduct of injecting enormous amount of liquidity trying to stabilize growth. And so at times this excess liquidity finds itself in fuel speculative activities, and then the authorities come back in. It's a very fine line they need to walk. I think it's that they shouldn't withdraw stimulus just because they have some frothy commodity prices, but they probably go in with micro regulations trying to tamp that down.
What do you make of this anonymous critiquer, if you want to call him that? This was the one story on the Bloomberg terminal that I thought was most interesting. Having lived in China,